This is Bazaar Morning Call. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Thank God it's Friday. That's the mood here in the studio. That's, I think, the mood everywhere as well as we head into the weekend. Last day of the week. This is Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant, as always, with me, my colleagues Sonia and Nigel. Guys, morning.
Morning. I promise you, I've never heard you this enthusiastic on any other day of the week.
Then I was feeding off the energy. DJIA. Right?
Oh, that relief, now more than the energy, I think that relief about the end of the week. But it's been a long week. The market has, of course, done very well. 4 days of record highs, but so much news flow as well. And finally, it's the ultimate day of the week.
Well, it's been green on the screen, and Sonia's bringing some red on the screen for today by a tire, but I mean, what a move yesterday. Spectacular move, right?
And absolutely. And, in a way, we were saying this, talking about this yesterday, that wait for the market to tell you that either it breaks. It could have gone either way, but then the market sort of chose to do what it did. Sharp recovery from the day's lowest point. And we finally broke above. I mean, we broke above Wednesday's high, which is the more important thing. We didn't close above it, but we broke intraday above 22,249, which is Wednesday's high. And that is significant because price action now has confirmed. We were talking about yesterday morning how this feeling has been festering for a while that the market perhaps wants to take a bit of a break, wants to go sideways. And those are important near term if you're trading. So let the price action tell you that it's in still solid shape and the market basically wants to head higher, even in the near term, without any sort of, two ways about it. And that's what the market did. So you had 22,217 by close after that very strong pullback from the day's lowest point. Overnight, and I wonder whether we kind of built in some of this yesterday because, US futures were trading, Nasdaq was up, etc. And I think some of it we priced in day to day is what I'm talking about. But look at this, record highs on the Dow, record high on the S&P 500, record high on the Nasdaq 100 index as well. 3% of the Nasdaq. Yesterday morning we started with the question, can Nvidia spark a rally in US markets? And that is what it has done. And that has been true not just yesterday, but for the last many quarters. The first time Nvidia did this was, the 26th of May when they reported those set of numbers where it was the largest ever beat in the semiconductor sector. The poster child is Nvidia, and it's sort of added 17% at yesterday's close. So that's a huge move. There was data as well, data which basically told you that things are going good. Confidence in the economy, labor market, etc. is, pretty all right. So weekly jobless claims is that data, and the fall there was lower than expected. And it talks to the labor market resilience. There was Fed speak, which was again hawkish. So there was Fed's Harker, who basically cautioned against cutting interest rates too soon. So, data strong, Fed slightly hawkish. It could have been read either which way, right? But I think the fear of lesser than expected rate cuts was overshadowed by this strong FOMO in tech-related stocks. You look at Meta, it was up about 4% last night. You look at Amazon, you look at Microsoft, you look at Tesla, of course, 1.5%, lesser so. But, strong moves. And this is 25% of the US market and a strong say in what the indices do there. Both the Nasdaq, of course, but the S&P 500 as well. The 10-year was up just 1 basis points. We were at about, 4.3%. The dollar index is trading just under 104 levels. Oil prices around the $83.5 per barrel mark. So this is all, looking pretty okay and not very different from where we left off. Some of these macro indicators from where we left off over the last 2 days now. Now, the question about what we do here today, right? So the Nifty's rally in part yesterday was perhaps, I would say, in anticipation to a very strong overnight US action. Many were watching that. I mean, we were talking about this Nvidia effect to the broader ecosystem there. So maybe some of it is built in, but having said that, given the fact that the Nifty bounced off, it didn't even get to 21,800, which was the support we were talking about. The low was 21, we fell short by about 60 points. But it's negated this down move, and I think it heads to 22,538. That's the immediate sort of target that we're looking at on the Nifty. So basically 22,500, 22,500 plus. It should complete on the move up. On the downside, the supports come in at 21,875, which is the low, and 21,647, which is the 40-day hourly exponential moving average. These are support levels. Now, again, the script goes back to trying to buy the dips, finding the dips intraday and then trying to buy it because the market's given you a signal that it wants to head higher without a break. For the Nifty Bank, we are still not, we're still below the previous high, which is 47,363. That is point number one. It's bounced from the 40 hourly exponential moving average yesterday. And yesterday's low, which is 46,426, will be an important support level. The index, of course, ended about 0.25% lower. And it underperformed what the Nifty large cap space has been doing. The GIFT Nifty will come up on your screen. It's up about 70 points. I mean, so you can just hope that at some point it flatlines and you get a bit of a dip because this looks like it's headed to about 22,500 at least. Sonia.
Oh, absolutely. I mean, this is a really, really good situation that the market is dealing with, right? If you're a bull, that is. A buy on dips is something that is absolutely working in the market's favor. And I think that's going to be the trend for the next couple of days as well. The buy on dips theory. Remember, it's the fourth day of record highs that the Nifty has seen. And the buy on dip strategy is something that has worked through and through in the last 1 month. In fact, yesterday, the Nifty recovered 375 points from the day's lows. And, you know, the most important thing is that the Nifty has now held on to that support of the 20-day moving average. And this 20 DMA is a very powerful tool for the market. The reversal is something that the market has taken with both hands, and it just validates the fact that every dip, if you go ahead and buy it, it sort of, you know, helps you with good returns. The S&P 500 also closed at a fresh record high yesterday, so keep an eye out on that. The two pockets that are seeing buying interest, realty and autos. In fact, you know, autos had a little bit of a dithering in the last couple of days, but that was bought into yesterday. Realty index as well closed about 0.5% higher yesterday. A lot of realty stocks did well. And there was large buying yet again from domestic institutions. So DIIs bought about 1,820 crores in the cash market. So good going. The market strategy continues to be buy every dips. And today as well, it's indicating the start will be well in the green. Good numbers coming in. Of course, Nvidia once again surged about 16% of a strong Q4 earnings. And, you know, that was continued to be the big talking point in the global markets. But for our own markets as well, just keep an eye out on these rate sensitives, realty, autos. Maybe there could be some more traction there.
Well, that's right. And yesterday had a bit of symmetry that played out, right? Because we hit the 22,222 on the 22nd of the second month. You know, so that was a data point that came out as well in terms of symmetrical correlation that did play out. Well, besides that, you know, a few other things that we did take note of. In yesterday's trading session, you had the Nifty. Well, it went ahead and it made a fresh all-time high. And if you look at the Nifty, it's making fresh all-time highs, but it's leaving the Nifty Bank behind. And remember the Nifty Bank, well, it hit a fresh all-time high sometime towards the end of December. So the Nifty Bank is still 3.5% away from those fresh all-time highs. If that can get its act together, that's what will propel the Nifty even higher towards that 23,000 odd mark. The problem over here is HDFC Bank. That's been, dragging. That's why the Nifty Bank is underperforming. But yesterday, all through the trading session, you had select stocks that did well. And the advanced decline ratio tells you the story out there. Even when the Nifty was low, you had the small cap index case in point that was trading well in the green. But the power of short covering is coming into play. Even in yesterday's trading session, there was massive short covering. You had some long addition as well. And just pull up the chart, to show you the kind of short covering that we've seen in this series. The Nifty is up 865 points in this series itself. And take a look at the shorts. From around 78%, it's come down to around that 65% approximately. In fact, even lower than that. And you have the Nifty that's been gradually moving up as well. Well, if you want to put it in absolute contracts, you look at it from around 108 lakh contracts, we are down to, close to around 55,000 contracts, 34,000 contracts actually, as of last count. Yesterday, we did see a fair bit of writing as well. 21,900 put, 22,000 put, fair bit of writing out there. So let's get to the support levels. On the Nifty itself, you have the 20 and the 50 DMA if you want to look at reference points on the downside. And for the Nifty Bank, you look at yesterday's low. You know, that's the important data point that you look at. And the 50 DMA, somewhere in that vicinity. If it breaks these levels, then you're looking at the 20 DMA. But for the time being, these will be your near-term support levels. The stocks that focus on today, I think Vodafone Idea as well as Indices, they could be the stocks of the day, post the commentary that came out from Mr. Birla, and also the notice that came in later that they could be looking at raising some money. So Vodafone Idea, that'll be the stock in focus, obviously, if they can come up with the required money. And if Vodafone Idea survives, then in fact, Indices is normally the play. So both these two stocks are going to be the focal points.
All right, thanks a lot for that, Nigel. Let's do one thing. Let's get straight to the show. Let me tell you what's lined up in the first half hour. We'll get you updates from the markets across the globe. Cameron Brand, the Director of Research at EPFR Global, will be with us to discuss the global trade setup. Later, our research team will be bringing you CNBC TV18's list of top 10 stocks for the day. At 8:30 a.m. this morning, we will do a fundamental stock analysis with Nishchal Maheshwari of Centrum Broking. But first up, on the equities front, we have Chris Wood of Jefferies, who says that greed and fear continues to believe that India is the best equity story in the world on a 10-year view. Still, it is only fair to acknowledge that many investors they have met in recent years also make the point that the returns in the US dollar terms have not been so good. As for Asia ex-Japan long-only equity portfolio, the investments in SBI, Samsung Electronics and TSMC will be increased by 1 percentage point each, and these will be paid for by reducing the investments in Capricorn Metals, Reliance Industries and HDFC Bank by 1 percentage point each. So they have reduced their exposure in some of the larger names like Reliance Industries and HDFC Bank.
All right, well, specific to India portfolio, we have Jefferies' Mahesh Nandurkar, who's listed 26 top buy ideas and some stocks that they're bearish on. Top buys include the likes of ICICI Bank, Axis, State Bank of India, TVS Motors, Coal India, Larsen & Toubro. They're also positive on some mid-cap names. JSW Energy finds a mention. There's Godrej Properties, Macrotech Developers, Zomato, Honasa. The rest of the names on your screen, while the top underperforming ideas are Tech Mahindra, Asian Paints, Gujarat Gas, HPCL, Lotus Laboratories and Biocon.
Okay, let's also get you some money market views and tell you how to approach the rupee now. Lakshmanan V of Federal Bank says the FOMC meeting minutes were hawkish as members await further data points before cutting rates with inflation resurfacing and tight labour markets. The rupee strengthening during the week on account of foreign inflows while other major currencies consolidate. He expects the rupee to remain slightly volatile and trade within the range of 82.66 to 83.10 in the upcoming sessions.
All right, on bonds, we have Lakshmanan V, who says that US bond yields rose with a 10-year yield staying above or near the 4.3% level. This is after the minutes of the Federal Reserve's latest meeting showed policymakers were concerned about cutting interest rates prematurely. RBI's MPC minutes were largely along expected lines, with most members raising concerns around food inflation and emphasizing the need of bringing inflation closer to the 4% target on a durable basis. In coming sessions, he expects the India 10-year to trade between 7 to 7.15%.